Sheila's on the line from Calgary. Go ahead, Sheila.
Yes, I'm calling on Concordia Healthcare. And my questions are, what is your guest's opinion on this stock? And what is his forecast for the next year? Thank you.
Thanks.
Hi there. So let's just talk quickly in the way that we look at the world. First of all, in the Canadian market, so it's a little bit of a tougher market to be in. Healthcare, there have been some strong pockets and some weak pockets. Biotech and pharmaceutical have had a tough 3 to 4 months. They broke down in the fall. So the sector I'm going to give an X to right now for adding new names right now.
Okay.
And then within the group, Concordia has had a very tough go since September. So technically the stock is broken. The group is under pressure. If I were to have to do something in the pharmaceuticals, I would look at one of the big names in the U.S. like a Bristol Myers or a Pfizer. They're behaving much better. They're in the right market. They're in the right currency. So I would suggest take a look at like a Bristol Myers instead of a Concordia. You might also within healthcare look at healthcare devices because the healthcare device companies are behaving quite well. Companies like Intuitive Surgical would be another good example. ISRG, which is trading very close to the highs in a very tough market. Stock's doing particularly well. They do robotic devices for surgery.
Okay, so ISRG.
ISRG.
What's the name?
Bristol Myers. Intuitive Surgical.
Oh.
It's a $20 billion company that makes these Da Vinci devices, which is for remote surgical procedures.
Okay, so remote, so the surgeon can be somewhere else.
Absolutely.
That's amazing, yeah. Doctor once told me that with great surgeons, it's all experience.
Yeah.
It's not talent. It's like musicians. It's just experience.
Well, and now equipment.
Yeah, okay. Let's head to Mississauga. Daljit's on the line. Go ahead, Daljit.
Hi, good afternoon, both of you.
Good afternoon.
My question is regarding First Quantum Mineral. Market is up today, and still though it came down more than 5%. In the morning, it was $3.50, and now $2.93.
Yeah.
My buying price was $4, and just want to know what is your target price, and do you hold it, and total view on this security.
Okay.
Thank you.
So Daljit, one of the most important things you can do when you make an investment is decide before you invest where you're going to exit if it doesn't work out. And it's really important you think about that on this. The mining sector is under pressure. We have a demand problem from Asia, and we've got too much supply. First Quantum is a stock that's been selling off now for a year, and arguably the sector's been selling off for longer than that. I think that this group has a problem, and I think before it's done, there are going to be bankruptcies and restructurings, and I think you're really fighting the tide on something like First Quantum. So I would pick an exit price. There's no support for the stock anywhere nearby. So I would be a seller myself. We don't own any minerals companies. We own no energy. I think you have to stay right now as far from the epicenter of the problem, which is China, as you can stay, and metals and mining companies are too close.
The only negative news I've seen on First Quantum is Fitch Ratings just cut them to single B from double B minus. So you're way down there in the single B territory.
Well, and of course, you know, the obvious problem is the price of the product that they sell, which continues to fall. And the thing that you have to remember is that many of the producing countries around the world are letting their currencies fall dramatically, which takes down their cost of production. So it's almost a race to the bottom in the currencies of the countries that are producing resources. Like Brazil's taken their currency down 60%. So that is competitive devaluation. And even if the price of the raw material is falling, along with it, it's very tough to make money. And I just would avoid the group for now. I think that there's some ways to go in this commodities bear market.
Yeah, Fitch puts their debt north of $5 billion US and says that the debt to cash flow could hit 10 times this year.
There's a lot of companies going to run into a debt problem.
We have got to take a break. We're going to be right back with David Burrows, President and Chief Investment Officer or Chief Investment Strategist at Barometer Capital Management, and he's answering your questions on North American large caps. The number 1-855-326-6266.